Hey guys, it's Julie here with TipRanks, and today we're taking a look at 3 stocks that score a 10 out of 10. So let's get into it. Alright guys, welcome back. Thank you all so much for being here, and TGI Friday. Today we're taking a look at 3 stocks that score a 10 out of 10 on the TipRanks Smart Score. That looks at 8 unique factors and measures a stock's likelihood to outperform the overall market. On top of that, these stocks do come in with a strong buy consensus from Wall Street Analysts and have had several analysts increasing their price targets lately. So we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. We found these under our top Smart Score stock page on TipRanks. This is found right under the Ideas menu, and you'll get a list of stocks that are all scoring a 10 out of 10 on the TipRanks Smart Score. You can narrow it down by market cap, sector, and how long the stock has been scoring a 10. And just before we get into today's companies, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. You can also download the TipRanks mobile app to access all your favorite investment research tools on the go by following the links in the description. Now let's get right into our perfect 10 stocks. First on the list is Ceco Environmental. They trade under the ticker CECO, currently priced just shy of $29 per share. Their stock has climbed 41% year to date, and in the last 3 months is up over 10%. They score a 10 out of 10 on the TipRanks Smart Score with increased hedge fund activity, insiders scooping up some shares, and positive crowd wisdom. Ceco Environmental is an environmentally focused industrial technology company. This tech firm is developing and creating the technologies we'll need to control environmental air pollution, promote clean and efficient energy, and maintain environmentally sound handling and filtration of various liquids. They also offer on-site installation of these technologies and support to maintain them in practical use. They boast a wide-ranging customer base, including firms in the aerospace, automotive, cement, chemical, and fuel sectors, and their products are even found in specialty niches like noise control and glass manufacturing. A few weeks ago, on July 30th, Ceco Environmental shared their latest quarterly report. They did come out with mixed results, but also increased their full-year revenue guidance. For their second quarter, they reported earnings per share of 20 cents, which exceeded expectations by 4 cents per share. Revenue came in at $137.5 million, which was up 6%, but did fall over $5 million short of expectations. Their CEO said that during the quarter, they delivered several impressive financial records, including their highest second quarter sales, gross profit, adjusted EBITDA dollars, and excellent year-over-year margin expansion. Their backlog remains near record levels, and their year-to-date book-to-bill remains positive despite continued delays in some larger projects. Analysts seem pleased with this quarterly report, as we did have several increase their price targets, including a 5-star analyst from Needham. They said that the stock staged a strong recovery from the short-lived Q1 pullback after the company disappointed on the top line, and with shares trading near their all-time highs, investors are now more confident that Ceco remains on track to deliver double-digit growth in 2024. And they're not the only one to increase their price target. We also heard from an analyst at Northland. They said delays in larger projects caused underwhelming Q2 results, but these delays do not detract from the vast opportunity set for the company. With 6 current analyst ratings, the Ceco stock does come in as a unanimous strong buy. And the average price target of over $33 would imply an upside potential of 16% from current prices. Looking down below, we've had 4 analysts recently increase their price targets, all to $35 per share, which would be an upside of 21%. While our low end is this $28 here, which would be a slight downside of over 2%. Our second 10 out of 10 stock is Baker Hughes. They trade under the ticker BKR, priced at about $35 per share. Overall, their stock has gained nearly 5% year to date, and in the last 3 months has gained 9%. Their 10 out of 10 Smart Score does also come with increased hedge fund activity, very positive crowd wisdom, and positive technicals. Baker Hughes is a longtime leader in the oil patch services niche. They are an advanced industrial technology firm working at both the development and deployment of the energy technology needed to maximize production and efficiency in the world's hydrocarbon production regions. They work with oil and natural gas producers as well as industrial firms to provide streamlined solutions for the development of clean and reliable energy. They're known for their leadership and solutions in the liquefied natural gas industry. They shared their second quarter results on July 25th, and they ended up increasing their sales guidance following their earnings and revenue beat. Their Q2 earnings per share came in at 57 cents, beating estimates by 8 cents per share. On the revenue side, they came in at $7.1 billion, which did grow 13% year over year and beat estimates by $300 million. The company had orders of $7.5 billion for the quarter, and they noted that they continue to strengthen their operating performance, driving meaningful margin expansion across both segments. And with this, they were raising the midpoint of their full-year guidance by 5%. A five-star analyst from Goldman Sachs did increase their price target on the stock following that quarterly report. They said that Baker Hughes' diversified offerings have reportedly been successful in securing strong orders in various end markets and regions, indicating a robust business model that is less dependent on the fluctuations of the oilfield sector. Their confidence in the company is also strengthened by Baker Hughes' effective management initiatives aimed at streamlining operations and improving margins, a strategic approach that aligns with the company's ambitious targets set for 2025 and 2026. With 17 current analyst ratings, Baker Hughes does come in as a strong buy with 15 buy ratings and 2 holds. And the average price target of $43 would imply an upside potential of 23%. And Goldman Sachs was not the only analyst to increase their price target. You can see several up top here and even more down below coming from several five-star analysts as well. On the low end, we do have a hold rating here with an upside of 5%, while our high-end price target comes from an analyst at Jefferies with an upside of over 36%. If you've made it to our third stock today, this is a reminder to make sure you hit that thumbs up button. Our third 10 out of 10 stock is First Solar. They trade under the ticker FSLR, currently priced at $226. They've gained over 26% in this past year, hitting highs back in June, but over the last few months have been cooling off, dropping 21% in the last 3 months. Their 10 out of 10 Smart Score does come with bullish blogger sentiment, increased hedge fund activity, and very bullish news sentiment. First Solar is a solar energy solutions company. Founded back in 1999, First Solar is a leading American solar technology company that designs, manufactures, markets, and distributes solar modules and photovoltaic solar power systems. The company is unique among the world's 10 largest solar manufacturers for being the only U.S. headquartered company and not manufacturing in China. Their advanced thin-film photovoltaic modules represent the next generation of solar technologies. First Solar shared strong Q2 results back on July 30th, where they saw their earnings double, posting both an earnings and revenue beat. For their Q2, earnings per share came in well ahead of analyst expectations at $3.25, beating by 55 cents per share. Revenue came in at $1 billion, also beating estimates by $66 million. The company did maintain their full-year guidance, saying that they were pleased with their financial and operational execution through the first half of the year as they continued to deliver on their commitments. And of course, a strong earnings report leads to plenty of Wall Street analysts weighing in. This includes one from Argus Research, who did increase their price target on the First Solar stock. The analyst noted that the Q2 results topped consensus estimates, and the company also experienced favorable action from the U.S. government to address the flooding of low-cost solar products from Asia into the United States, even though more work needs to be done. Argus adds that the company should see benefits from evolving tariffs and other regulations regardless of the election outcome this year. First Solar has attracted 25 current analyst ratings, coming in as a strong buy with 22 buy ratings and 3 holds. The average price target comes in at $290, implying an upside potential of 28.75% from current prices, and you can see quite a few analysts bumping up their price target on the stock, even as we go back further into June here as well. On the low end, we do have our buy ratings at $250. There's several, which would be an upside of 14.5%, while our high-end price target comes in at $350, which would be an upside of 60%. So there we have 3 10 out of 10 stocks that analysts have been bumping up their price targets on lately. Let me know your thoughts on these companies in the comments down below. I always love hearing from you guys. And keep in mind, these videos are never a suggestion to buy or sell any specific stock, so make sure you're always sticking to your own investment plan. Thank you guys so much for watching. Have a great weekend, and I'll see you back here next time.